Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance, exploring the latest trends, risks, and opportunities. I'm your host, Lewis, and I'm excited to have you join us today. As we begin this episode, we're going to take a closer look at a story that's been making headlines in recent weeks. It involves the intersection of politics, cryptocurrency, and financial regulation. Now, I know some of our listeners might be thinking, cryptocurrency? Isn't that just a bunch of hype? But bear with me, because this story has some serious implications for investors, policymakers, and anyone interested in the future of finance. At the center of this story is former President Donald Trump, who has been making waves in the crypto space with his new venture, World Liberty Financial. The company has raised over $500 million in recent months, and the Trump family stands to gain significantly from its success. But here's where things get interesting. The Trump administration is also pushing for relaxed regulations on cryptocurrency, which could potentially benefit World Liberty Financial and other players in the industry. Now, some proponents of crypto argue that lighter regulation will foster innovation and growth in the sector. And it's true that blockchain technology and digital currencies have the potential to disrupt traditional finance and create new opportunities for investors. However, others are sounding the alarm about the risks of deregulation, citing concerns about money laundering, fraud, and financial instability. Senator Elizabeth Warren, for example, has been vocal about her opposition to the Senate stablecoin bill, which she argues would loosen oversight and pave the way for criminals and terrorists to exploit the financial system. And with recent studies showing that cryptocurrency is being used increasingly by Chinese producers and exporters of fentanyl and other synthetic drugs, these concerns are not unfounded. So, what does this mean for investors and the broader financial landscape? Should we be embracing the potential of cryptocurrency, or exercising caution in the face of regulatory uncertainty? These are just some of the questions we'll be exploring on today's show. We'll be talking to experts from both sides of the debate, examining the potential benefits and risks of crypto deregulation, and looking at what this might mean for your portfolio. So, stay tuned. It's going to be a fascinating conversation. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In this segment, we'll be discussing the latest developments in the global market, specifically focusing on the European shares and the recent tariff announcements. As reported by the Economic Times, European shares have surged, led by technology stocks, after the US eased China tariffs on electronics. This move has provided markets with a much-needed breather following weeks of sharp fluctuations. The Pan-European Stocks 600 was up 2.1% by 824 GMT, after registering its third consecutive week in the red on Friday. Now, let's take a closer look at what this means for investors and the market as a whole. The easing of tariffs on smartphones, computers, and other electronics has been seen as a positive sign, with technology stocks rising nearly 3% and economically sensitive banks advancing 3.1%. However, it's essential to note that this is not a permanent solution, and the uncertainty surrounding Trump's tariff policy still lingers. Goldman Sachs has cut its 12-month price forecast for the benchmark stocks 600 index to 520 from 570, citing the ongoing uncertainty as a primary reason. The European Central Bank is set to hold its policy meeting on Thursday, with markets widely anticipating a 25 basis point rate cut. Investors will be keeping a close eye on policymakers' assessments of how tariffs are affecting the economic outlook. It's also worth mentioning that BNP Paribas has climbed 4.1% after the French bank lowered its return on invested capital forecast for its acquisition of AXA's asset management arm. Additionally, Vallourec rose 5.1% after entering exclusive talks with investment company AIDailyPress to sell Ceramax. As we navigate this complex and ever-changing landscape, it's crucial to remain informed and up-to-date on the latest developments. We'll continue to monitor the situation and provide you with expert analysis and insights to help you make informed decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. Today, we've been exploring the complex world of global trade and economic policy. As we wrap up this episode, I want to dive into a story that's been making waves in the financial markets. You may have heard about the recent tariff announcements from the Trump administration, but what you might not know is just how much the narrative has shifted over the past few weeks. It all started with the introduction of new tariffs, which were hailed as Liberation Day by some. However, since then, we've seen a series of flip-flops and reversals that have left many in the business community scratching their heads. The administration initially suggested that certain goods, like smartphones and laptops, would be exempt from the tariffs, only to later claim that these exemptions might be temporary. Now, I know some of our listeners might be thinking, what's the big deal? Tariffs are just a normal part of trade policy. But the issue here is the lack of clarity and consistency. Businesses need predictability to make informed decisions, and this kind of uncertainty can have serious consequences for the economy. As we've seen, the stock market has been volatile in response to these tariff announcements, with some days seeing significant gains and others experiencing sharp losses. And it's not just the markets that are affected. Consumers could also feel the pinch as prices rise due to increased tariffs. So, what can we take away from this story? Firstly, it's a reminder that trade policy is complex and multifaceted. Secondly, it highlights the importance of clear communication and consistency in economic policymaking. And finally, it serves as a cautionary tale for investors to be prepared for unexpected twists and turns in the markets. As we close out today's episode, I want to emphasize the need for nuance and balance when evaluating these kinds of stories. It's easy to get caught up in the headlines and sound bites, but as investors, we need to look beyond the surface level and consider the potential implications for our portfolios. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.